The preferred shares from Microstrategy are really interesting vehicles for making income. Some are more risky than others, but some have that moonshot capability. STRK has that moonshot capability. So just the term strike, you can imagine if MicroStrategy goes up exponentially, you could be redeemed or you could trade in. You have the right to trade in your shares, convert them to MicroStrategy common stock, but you get 1/10 the value. So basically, if MicroStrategy is at $1,000, you would get $100 for strike. So if strike's currently trading at underneath par, which par for all these funds is $100, that's where you get redeemed at if these shares get cold, right? If MicroStrategy calls them. These are perpetual preferred shares, though, so they don't have a callable date. They could go on in perpetuity, basically. Currently, the only one that's paying a monthly dividend is Stretch, basically STRC. They're paying a monthly, and it's around the 10, 11% currently. And the price is meant to stay close to $100. And the way the MicroStrategy maintains that is they'll basically uh, trade out on it, try to or reduce the yield rather. They'll bring the yield down to bring the price back down to par, which is $100, or they'll increase the yield to attract more buyers to bring the price back up because that buying pressure brings. They want to keep it close to $100. It's not always going to be 100, but keep this in mind: if you get redeemed at any time, and if they call these shares, you'll be redeemed at $100. So if you buy these funds at a discount, you get $100 if they call them. Now, you want to get $100 if you decide to sell them. That's not the case. It's whatever the market price is at that time. So the one that's got the ability to go much higher relative to the price action on Bitcoin and MicroStrategy is Strike, STRK. Keep that in mind. The more stable one, STRC. And we'll get into the other funds here in a second. Okay, so Strife, according to my understanding, is the lowest risk one. It's the preferred tier. It's the one that's going to get redeemed first if something happens to the company. It's got priority over all the other preferred shares and definitely over the common stock. If like MicroStrategy was going to go bankrupt or something like to that effect, and the dividends are accumulated, they must be repaid. If they skip a quarterly payment, they pay quarterly dividends, right? If they skip a payment for whatever reason, they have to redeem you at 10% at some point in time, and that's cumulative. So keep that in mind. So Strife would be the one that in bad times is one that's going to redeem you at $100 and be cumulative on the dividend too if they miss dividend payments. Now Stride is non-cumulative. Basically, you could lose the dividend if they decide not to pay a dividend. So it trades at a discount to $100 at quite often, and it's considered the highest risk preferred tier amongst them, but you can get a higher yield supposedly off of that one. Okay, that kind of explains those. So here's the quarterly payout schedule for STRK, STRF, and STRD, basically. Upcoming next dividend dates. These are projections, basically. They seem to all pay at the end of the month. These all pay quarterly, so keep that in mind. But you can see how they kind of staggered, right? They kind of staggered these dates. Actually, no, these dates are all the same. Uh, Basically. So they all pay in the same kind of time frame. I stand corrected. All right, guys. So on the monthly payout, that is STRC. It pays a monthly. Currently, it's at 11% based on the last dividend date, but it generally stays around that 10% level. The ex-dividend date usually falls on the 14th or 15th of each month, and the payment date is toward the end or first of the month. So within about 2 weeks from the ex-dividend date. Now, they have a policy where if there's less than 25% of the original issued shares outstanding, they can redeem all the shares if they want. But if they do that, they got to pay you par, which is $100 per share, whatever the share price is at that time of those preferred shares. So that's kind of cleanup call, and that's probably not likely going to happen, but just keep that in mind. If they do decide to redeem it, there has to be the condition is if there's only less than 25% of the original issuance they came out with outstanding, then they could redeem the rest of the shares that they want. But they're going to have to pay you $100 plus any accumulated unpaid dividends. So pretty nice, actually, considering. So with STRC, they can force redemption on you, but on the other three, there's a limited thing that they could do it if it's under 25% on any of them. I believe is how they could do it on the cleanup. But they can't. Otherwise, they can't force redemption on you. The safest one is considered to be STRF, Strife. If you want capital preservation, this is supposedly the gold standard because it's a senior, most preferred stock in the company's capital structure. This means during any times of financial stress, Strife holders are paid before holders of the other three, and also the holders of the common stock for Microstrategy. For price appreciation, if you want to benefit, if you think MicroStrategy is going to go up in share price, the one that's going to benefit relative to MicroStrategy price action, and MicroStrategy is obviously directly correlated with Bitcoin's price action, STRK is the one you want. Strike, like striking it rich. Keep that in mind. That's how you can remember it. Just say strike, like gold strike, The conversion engine on it isn't one for one, though. If you want to convert it common shares of MicroStrategy, you're going to get 1/10 the value of whatever MicroStrategy common stock is at that time. So if you're repaid $100, if that's par, MicroStrategy would have to be over $1,000 for you to beat $100. So, example, if MicroStrategy is at 1,000, you get 1/10 of that. That's $100. So you would want MicroStrategy to go up exponentially higher than $1,000 in order to profit over what they would pay you on par if they were going to redeem the shares of Strike. So that's the way I look at Strike as a higher risk one too. It often trades at a discount to whatever the par is, and par, always keep in mind, is around $100. So with Strike, you get uncapped upside relative to whatever MicroStrategy common stock does. So your shares will move up too. So a lot of times Strike is trading at a discount to that par price of $100. You'll see it at a deep discount, like especially currently because MicroStrategy is sold off, so it's trading at a discount currently. This is more information relative to both Strife and Strike as far as which one's considered the safest and which one's considered the more riskiest. Strike being considered the most riskiest because it trades at a discount to par a lot of times. Strife is the senior preferred share. That's why it's considered the safest, basically. And they have to pay you basically on your accumulated dividends if they miss a payment on a quarter. That's cumulative. They have to pay it back at some point in time. So looking at their 52-week highs and 52-week lows, Stretch basically its low when it first started out, it was around $88, and before it got some notoriety and they started accumulating some volume in trading, it was trading at a significant discount to par, which is always at $100. The 52-week high, you got slightly over $100 at $100.20. Strike has moved like MicroStrategy. Basically, I think it's trading currently today. It closed at 82.75, so it's trading still at a significant discount to par, which is $100. And it's moving relatively close to what you see MicroStrategy doing. MicroStrategy sold off at over 4%. Strike dropped over 3%. If you look at the others, Strike, STRC, pretty stable, was actually slightly green for the day. And then you see Strife as fairly stable, only down 0.11%, and Stride at 0.2% discount. And you see Stride is actually trading significantly lower than all the rest of the four on this. But these are the 52-week highs and lows. Keeping in mind the more unstable funds of PARB, STRD, and STRK. They're the ones going to move more relative to MicroStrategy. And you're going to have more safety with STRF and STRC. The only monthly payer on here is STRC. So keep that in mind. I currently own 10 shares of STRC, but I'm really curious and paying attention to the Bitcoin chart, and I'm considering going risk on with STRK for both that quarterly dividend they pay out and the fact that's paying. It's trading currently at 82.75. After hours, it's up a little bit, but it's trading at a significant discount to the par price of 100. And if Bitcoin does double in the future, the shares of Stark are going to go up significantly higher beyond $100, obviously, because if you look at that price action, it was trading at 129. You also see that with Strife, though. It was up there too. But the other two, Stride and Strike, STRC rather, Stretch. Let's call that Stretch. STRD, we'll call that Stride. Basically, they're trading, their highs are a lot lower. All right, guys, that's pretty much it in a nutshell. I hope you understand what I said. I have to constantly look at my notes to understand these funds, but they're very interesting. If you're going to trade MicroStrategy, why not just trade the preferred shares and mix it up a little bit? In my opinion, this isn't financial advice, but if I'm going to own anything, I like to get paid on it. I'm a dividend chaser, basically, and I like to mix up levels of risk too. And that's the interesting thing in these MicroStrategy preferred shares. You can mix up the risk level according to your investment style, however which way you want. And that's kind of what I'm going to be doing going forward. I'm primarily going to look at buying shares of Stretch STRC and shares of Strike STRK, the top two you see on the chart there. All right, guys, take care. Bye.